Hi, good day. My name is Ricardo Sullivan, and today I want to have a chat with you again about how to create an event budget. We would have done a video before where we would have spoken about a more fundamental approach, how to do a very basic budget. Today, I'm going to share with you a little more advanced version of that budget. It's actually taken from an event. The data from it was taken from an event, not exactly the amounts, but some of the things that were required to pull off an event I would have completed in the past. And I'll go through each item on why it is some of these things were necessary, how it impacted the planning, and why it is these things should be considered and properly recorded in this manner. So let's get into that. Okay, in creating a budget, we must be mindful of something. We need to pay attention to our projection and the actual budget. The actual budget is actual amounts received, actual amounts spent, and then we need to always be mindful that in everything that we are doing, we should be able to evaluate whether it's working or not. So we'd go through all three of these budgets very quickly, and we can see it's following the very same format as the fundamental video we had earlier, whereby we identify our income and our expenses, breaking them up into fixed and variable expenses. The variable expenses pretty much means the amount of money being spent on each person applying. So every time someone applies to your event, how much money do you have to spend just to accommodate them? That is what would be captured as a variable expense. Everything else would be classified as a fixed expense. This includes our guests, our venue, transportation, everything, even our presenters. So let's go through. During this event, you would recognize, if you're familiar with Excel, during some of these fields as I clicked, you would recognize some small codes attached to do some simple multiplications. So I'll share with you some of the numbers and some of the assumptions, and we can see how when changing these things, it would adjust the entire table and really help with our planning. So this field in particular is an online payment service fee. This is for persons who would have paid using a payment gateway. There would be some fees attached. We are assuming not everybody would have used it, but 30% of everyone who was applying for in-person ticket would have used it. And the other assumption was that everyone who purchased an online ticket would have used it. This calculation here is the fee. Is how it is the fee would be calculated so that we can get a better gauge of how much they would be charged. Yeah. These are very much standard basics fees. We have 30 persons attending in person. We don't have to purchase any meals for anyone attending online, but there may be an application license that we may have to purchase for them so that they can interact with us and be a part of the workshop. And it's very important that I separated it, because I did this deliberately, because when you are having multiple income streams, it's a little more challenging to determine your break even. So you have to use something called a weighted average, which pays attention to the aggregate of the two prices and what expected volume in each ticket would be expected. Yeah, so let's go through that very quickly. I wouldn't recommend you use the actual budget, this area here, when it is you're calling your caterer, because you could be a little bit confused. Have a separate table for that. So a separate table for instance, we have 50 paying persons, but however, it's only 30 of them would be in person, right? So our guests, our staff, our presenters, they all have to eat. So we have a separate field for that, where we add all of these with the persons. So in total, we'd have 43 persons in the room. This is the number we are going to use when we are purchasing things like our materials and our meals in particular for our caterer. Meals in particular for our participants, in-person participants. And then we have data regarding how much persons we need to cater for online, total online. This is showing a bit odd, but this would be our guests. This would speak to our guests. Yeah. The expense per person is $60. The aggregate of these numbers would add up to 60, and we see $75 for the ticket. This is where we get. So this information here is more just like inputs or just data sets that we are going to use that would help us with our budgeting. In this instance, we didn't set a goal. Anything we make, we are happy with. We didn't identify a target, wasn't identified. It's bad practice, but there's a projection budget for now. We'll just leave it as that. The contribution margin in person. This is the piece that I needed to get into. So when it is you are having an event and there's just one income stream, just persons purchasing a ticket to either attend online alone. But because persons are purchasing tickets to attend online and persons purchasing tickets to attend in person, we can't just do a simple average. You add these two and then you divide by 2, because what if this number was significantly lower? Then it would be giving you a very, very strange, it would give you a very, you'll get a false idea of what your break-even mark is. So what it is we would do a weighted average, and how it is we would do this weighted average is we would identify what's the contribution margin for each of the ticketed items. In this instance, it would be 550 minus the 160 would give us this amount, and the contribution margin for the online persons would be $400 less the amount per person that attending. And then we would get a ratio. We have to perform a specific ratio. So 60% our anticipation and 60% of our participants would be coming online, would be attending in persons, 40% would be online, right? From there we do a weighted average where we just simply multiply this by this, this by this, and we add it together. Yeah, it's simple. And from there we just simply divide our weighted average by our fixed expenses, and that gives us our break even, 49. Because it's a weighted average and not a exact amount, because it's challenging to get an exact amount when there's multiple income streams. This number could be off. What if 49 persons attended online and none in person? So we need to always be mindful that this is just a projected budget, and this weighted average is just to give us an idea and a gauge. So now we've gone through this. So now let's try to wrap up, because everything else should be happening very quickly afterwards. After we've done our projection, we come to our actual budget, and here we put in actual numbers. So before we had 30, we put in actual numbers. 65 persons attended the event. We had 18 persons, so a little less. You would recognize small little adjustments in this, and this is just showing you. So do we plan for something? There's a likeliness we may or may not meet targets. We may spend more or less, and this is where our reflection comes in. So now we just have totals for each item. All that is in red shows unfavorable, and well, black is favorable in this instance. So our online ticket, we lost $800, meaning that we did not sell as much as we anticipated for. And our variance for here is 19,000, meaning that we would have sold 19,000 more than anticipated. That's what this means. Our variance here is 0. We spent exactly the same amounts we planned. In this instance, everything that is red is unfavorable. The variable expense though unfavorable, it is expected to be in red, because if it is we are doing well, because the more persons attended, it's the more expenses we would have. So technically, though this is in red, it's still a good thing. Yep. So if you understand this, again, it's with just a little practice. This is very easy stuff. If you require any assistance, Skill Finder is always here to assist you. We're always here to assist you, and this is easy stuff. We just require a little bit of practice. So if you enjoyed this video, like and subscribe, and we'll see you again.